Hey guys, what is going up? I hope you guys are all having a great and amazing day today. In today's live stream, we are going to be kind of talking about some of these stocks to keep on watch. And kind of some of the top stocks to buy as of right now. If we look at the general market, you can see we're looking at the S&P 500. You can see we have this great upward trend, and over the past couple of weeks, we've seen a decent amount of sell-off, a sell-off of right at about 7-8%, which for the S&P 500 is quite large, just because this thing in general doesn't move too much. And you can see right now, just looking at the RSI, we had that little dip below, and then the stock or index, kind of bounced up. We had a little short-term recovery, and then went up about 2.4%. Now, anytime you have this amount of sell-off, for me, I look at this as like an opportunity to buy a lot of these stocks at a pretty decent discount, just because, you know, over the past 90 years, the S&P 500 has had that annual return rate of 9.8%. So pretty much whenever you buy it, if you're a long-term investor, you'll be up on your money given almost every market circumstance. So given that we've seen a lot of sell-off, I think a lot of this has to do with the Fed trying to fix inflation, which oftentimes will kind of jack up those interest rates, which will kind of slow the economy down. But given that we had that decent sell-off, I really think that does look like a good opportunity to pick up a couple of shares of this. So now, the very first stock that I want to talk about is AMZN. This is Amazon, right? So Amazon is probably one of the larger companies on this scale here. And you can see we had, before this major crash right down in here, Amazon was really just doing a lot of consolidation, really wasn't spiking up. It was just kind of slowly moving, really had that great support near and around that 200 moving average line. So every time it hit this, we had a tendency to see a lot of buying pressure step in, hit it in here, and then we had this crazy crash where the stock pretty much fell right at about 15%. Right now it's about 16% down. And then from the highs, it's just about 25%. So for me, I really think this does look like a good opportunity to pick up a couple of shares. The reason why I say that is because right now it's pretty much underneath that 30 on the RSI. Looking back at previous times that we've experienced it, the one time was right in here where we had that crazy sell-off. The stock kind of pushed up a little bit right in here. Stock immediately got bought up. And looking at the 3-year chart, you can see this is one of the only times that we've seen this amount of sell-off from Amazon in the past 3 years. You can see, yes, we've had some dips down in here, but given we've just had this crazy downward trend, I think that this does look like a good opportunity to pick up a couple of shares and kind of just hold it. I really think Amazon's not going anywhere. I think if anything, they're going to get stronger and stronger and stronger, and people aren't not going to use Amazon. Stock number 2 is ticker symbol HD. This is Home Depot. Home Depot is up about 2% as of today. Looking at the yearly chart, you can see we had this fantastic upward trend. Stock sold off from about $420 all the way to $367. Now, this is a sell-off of right at about 12%. So it's like buying Home Depot at a discount. Now, anytime a stock of this nature sells off this much, it always is a good opportunity. Pick up a couple of shares because you understand it's not going anywhere anytime soon. Home Depot is a fantastic stock. It does good in virtually every market because people constantly need to build, right? Building doesn't go away. That's one thing I realized, especially with the lockdowns and everything like that, is people need home improvement. If anything, Home Depot actually thrived throughout the past couple of years just because we've had crazy good interest rates. Which will cause builders to continue to build, and lumber has increased, but the pretty much demand didn't fall, which causes Home Depot to make some more money. I really think Home Depot is, like I mentioned, not going anywhere. Great stock, dividends, great growth, and it's just a good one to pick up a couple of shares given that we've seen a lot of sell-off from it. It's right on that support line, so pick up a couple of shares. Now the next one is NVDA. This one has the largest sell-off, I believe, out of all of them, and you can see from the highs here, this one has a sell-off of about 33%. NVIDIA makes pretty much computer parts, so they make, graphics cards, a whole bunch of things for the computers. I'm not a computer expert, but one thing they do very well is create solid products. Not to mention they have great revenue, great growth, and given that we have the whole metaverse coming up, which in my opinion is a great sector to just generally invest in, I think that NVIDIA is going to play a key part, because how do people get on the metaverse? They have to have access to a computer or something along those lines. So given that NVIDIA makes money from the metaverse, cryptocurrency, it's just a great one, right? To pick up a couple of shares, not to mention it's right on that 200 moving average line. So it's like picking up it right on a support line. It's undervalued on the RSI. It's just a fantastic company and it's not going anywhere. The next one is just invest in the S&P 500. Don't try to pick and choose other stocks if you have a hard time with that. Just generally invest in this. The S&P 500 has that great annual return rate of 9.8%. If you'd have bought in 2007, right before the 2008 crash, you're up on your money. If you'd have bought in 2020, what would that be? 2019, right before the 2020 crash, you're up on your money. If you have that long-term mindset, you will be fine. And you just have to continue to dollar cost average. And given that we've had a crazy amount of sell-off, for those of you that haven't started investing, this is a good opportunity to pick up a couple of shares. And this is like buying this ETF a couple of months ago. So it's a great opportunity. Pick up a couple of shares and you guys will be all right. Ticker symbol SPY. Now the next one here is Tesla. I think I am one of the biggest bulls of Tesla. Tesla is a fantastic company, and the only thing that Tesla has seen on their last earnings is just a delayed deliveries. The reason why they had this is because they do have some supply chain problems, very similar to Ford with the microchips, right? Ford has a very hard time getting chips right now just because of supply chain problems. Tesla's having a very similar thing, which is causing a little bit of some, not FOMO, but people are just, unsure right now. Investors are worried, causing sell-off. For me, this is a good opportunity. Pick up a couple of shares. You can see the stock is about $846. It's like buying it a couple of months ago. It has highs at $1,200. If this thing just even turns around and hits highs, you're looking at a great return of just at about 31%. And it's just a matter of time before we see that. We could see a little bit of some consolidation. But I think that this is just a great one and not going anywhere. Do you think SPY and QQQ reached bottom? It's hard saying. We have QQQ here. This is more of a tech heavy one. So you can see just by looking at like straight technical analysis, right? We had that old resistance right here. Old resistance has a tendency to act as new support. So you can see it hit it, and we did get a little buying pressure. It's pretty much undervalued on the RSI. So if we do have more sell-off, it's not going to be that much. I think this year we were kind of due for a correction and not a crash. A crash is pretty much when the stock market falls more than 20%. Correction is when it falls about 10%. And the corrections happen about every other year. Given we didn't have one last year, but we're having one this year, is kind of expected and kind of overdue. So I really think that it's hard determining if we're at the bottom. If we're not at the bottom, we're very close. So just continue to dollar cost average. If it sells off a little bit, just don't worry, continue to invest. It's not going anywhere. This is like investing in the general US economy, and it's just honestly a great one. And the craziest part is if we look at, a company like AAPL, you can see we've had a decent amount of sell-off, and this thing just got pushed up, 7% today because of their earnings, right? So the market, there is buyers there, which is really solid to see. If people were nervous about the market, they would not be hopping into companies like this right now. So, sorry, I think we're close to the bottom, but if we're not, just continue to dollar cost average, and that's what I would do. But that's kind of what's going on. Some of the stocks that I'm looking at least for this week or so. Really, that's pretty much it on my end. If you guys have any questions, make sure you guys ask them. But I think we'll probably see a little bit of some consolidation this week with just the market. Maybe a little dip down to about the 426 mark, a little buying pressure back up to the 445 range. In that range, it will probably consolidate for a minute just because of the kind of there's a lot of speculation with the market right now, just given there's a lot of the Fed's trying to fix inflation and all of that. So that's kind of what's going on right now. And then these are the top stocks that I'm at least looking at for this upcoming week and even the month, really. But that is it, guys. Thoughts on NEO? Yeah, we can pull it up. So you can see NEO has been absolutely getting slammed lately. And trust me, I'm a huge bull when it comes to this too. My average cost for NEO is about $11. Looking at the 3-year chart, you can see we had this great pop where the stock pretty much went from $2 up to $66. That's a return of about 2,500%. Given that we've had a lot of sell-off, right? It did establish support near and around $31. I did buy a couple there, and then this thing just continued to tank down. So it's hard saying. Anytime a stock goes up that much that quick and the fundamentals don't match it, it will have sell-off. And that's kind of what we've seen. They've had very similar problems with Tesla and virtually every auto company right now. They're just having a hard time getting parts. And that's kind of what we've seen. This stock over the past year has sold off right at about 70% of value. Does that mean it's a good opportunity to pick up a couple of shares? If you don't have any, I would start your dollar cost averaging right now. But will this stock fall back down to $10 before it hits highs? It easily could. It's a higher risk investment, more speculation. But if it does, and you have that belief, I think this is a good stock, a good company, pretty much the Tesla of China. Tesla tried going over to China and had a very hard time just because there is a decent amount of competition over there. But NEO has that proven track record with great revenues, great growth, good deliveries. It's just supply chain right now with all of these auto stocks. So start dollar cost averaging, and not to mention we've seen a lot of speculation just in the general market causing sell-off. So it's a decent stock, right? I want to go heavy in this. Maybe keep it under 5% of your portfolio stock like this, just because of the higher risk, higher reward. If we look at Ford too, you can see a very, very great, beautiful upward trend. Ford is honestly a decent company, and you can see that we've seen a decent amount of sell-off. Sell-off could easily continue right now, given the overall growth we've seen. It's only at a 54 on the RSI, and given we've had a 25% drop in Ford stock, it's only at a 54. So technically, sell-off could continue down to about $16, which would give it at like a 40 or a 35 on the RSI. So then that would be a good opportunity. Pick up a couple of shares if you don't have it. It's going to be right on that old resistance, which will act as new support, and go from there. Really, that's what I would do. But that is kind of it on my end. If you guys have any questions, make sure you guys ask them. And then that is it, guys. I hope you guys enjoyed it. If you did, hit that like button, subscribe, because it really helps me out when you guys do that. So we will see you tomorrow, most likely, in another episode, and go from there.